Well, on Daily Business Edition, and we will talk about energy tonight with our energy consultant, Geoffrey Puzzi. Sir, welcome to the show.
Thank you again.
Let us start the discussion from the hike of prices of oil. Actually, they went down because the crucial oil discussion right now is between the United States and Iran.
Well, the crucial oil discussion would be the trade wars, and this was putting a lot of downward pressure on oil prices. Specifically, you saw crude oil in the past year have a range of about $45. This is for the WTI contract. There's two contracts that people will look at, WTI and Brent, are the main financial contracts. And you've seen WTI between $45 and about $66. It's currently trading about $56, $57. And the deterrent was the trade wars. But at the same time, there's a very major factor pushing up prices, and that is the problems that the U.S. and Iran are seeing. And there's very much concern about the stability in the Middle East.
Okay, the producers would like the price go up to $80, $90 range. Is that possible?
Seeing oil going up to $90, I don't think that's possible. I do think we should see a rally in oil prices as we get towards the end of the year. And this is looking at different fundamentals, not just the stuff with Iran. I think spikes like that, when there's instability, are usually short term. But something that is going to have probably an effect for all of 2020 is there's some changes in regulations with the type of fuel that ships can burn. And this is called IMO 2020. And it states that ships have to start burning, instead of 3.5% sulfur fuel, they have to go down to 0.5%. So this is going to have a pull on different types of crude, that you get more distillate production, and distillate is something like a diesel, let's say,
right,
to kind of simplify this.
Well, that's another process that adds up to the price of the fuel.
Well, yes. So you have your refinery runs, and certain crudes produce more of different parts of the barrel. So diesel is just, this is called a middle distillate, diesel, jet fuel, kerosene, but then you have like the bottom of the barrel, which is heavy fuel oil, which is mostly what ships burn right now.
Okay, so there are like two versions. First, you can have an installation that will distillate sulfur from the fuel.
Yeah, so that you can have what's called a scrubber. This is one solution. Another solution is to burn a new fuel, which is going to be 0.5% fuel oil. And 0.5% fuel oil is more or less a distillate with some of the dirty stuff thrown in.
Right.
Or you can burn, which is currently burned in all the ECA areas. So this is in Europe, the North Sea, the Baltic Sea, down the English Channel, all the way to Gibraltar. And this is 0.1%. It's called a DMA, and it's more or less it's a gas oil. So, and then there's there's two other solutions, LNG, but right now the infrastructure is not there for LNG ships. There are some people that are doing this, but you can't say this is a huge percentage solution.
I'm not sure even the LNG tankers are burning LNG for their propulsion.
You have some tankers that are, but it is such a low number at this current time. Again, the infrastructure needs a lot more investment to get there, but it could be a solution for the future.
Okay, so we will see this very interesting. I remember the times when anything that has happened in the world economy or in the Near East pushed the oil price over $120 per barrel. Right now we are in the 60s and you cannot get more. What happened to the world economy? Why do we need less oil than we used to?
No, oil demand is growing, but the shale industry in the U.S. has pumped a massive amount. The U.S. is now the largest producer of oil in the world, and I don't see that turning back anytime soon. OPEC's lost some control because of this. And oil prices, just at this current time, make a lot more sense between 60 and 80. Part of the reason we were able to go so high, oil prices were depressed for so long that there wasn't investment in new technology, new oil finds, and you just didn't have the production coming in. So if you don't have investment for new production, you're going to see prices spike. And I'm sure there's other factors that shot us all the way to 147, but realistically, oil prices in the future should probably stay stable between, I'd say, $60 and $80. Maybe you see 50, maybe you see 40, but probably 60 and 80.
U.S. shale is a phenomenon right now. Are there any other countries that would like to use this technology for their domestic oil production?
You know, I think everyone's looking at the U.S. as a model. Let's see who else kind of gets involved more with the shale production.
Okay, but that's definitely the way we can expect to happen. Another the miracle of the energy market is LNG. Poland is benefiting from that in a way. Yeah,
Poland's importing actually a little bit of LNG from the United States. I know their terminal that opened in 2015 is already expanding. There are talks about an offshore floating terminal in Gdansk. And I do think, like, if you look at Poland, some of their energy, everyone to get to 2050, which Europe has their own plans, but everyone kind of needs to think about their country in a sense, what works best for somewhat of energy dependence, somewhat of where can I get multiple types of energy so I'm not dependent on too many places. And LNG right now is, you know, what is it, between 3 and 5% of what's being used in Poland, and I think there's great potential for growth there. And you could see Poland become a player in the Baltic Sea when it comes to LNG. This can kind of be the hub. This will be like a hub airport in Frankfurt, but in Poland, you're the LNG kings.
Right. From your point of view, the price for LNG that we get from the United States is lower than the price from Russia?
You know, price doesn't always matter as long as you can keep it economical. Because again, I don't think you want to buy all your energy needs from one place. Things can happen. You don't ever know what happens. So with whatever price has been paid, I'm sure it's economical. There's times there's very cheap LNG, but then you need to take in shipping cost, and infrastructure and shipping costs pay so much in trade. So it is, of course, easiest to always get from your neighbor. But again, you don't want to buy 100% from your neighbor. You want to say,
especially if the neighbor is Russia, that is using this energy weapon as a political tool.
Yeah, I mean, it is possible. They do use that with certain countries. We've seen it over and over again.
This is not uncommon in the energy market when the countries are trying to use their position as an energy provider to extend their political influences.
Yeah, I won't disagree there, that energy can definitely be used as a major political factor and an influential factor, because we can't run without a proper energy plan.
That's true. In the future, is the oil declining? Like the electric cars will shave the market for oil?
You know, I think the bigger effect than electric cars could be the new car sharing services, that it's making sense in certain major metropolitan areas where there's no reason for me to own a car anymore. And if you have that, that should have an effect on oil consumption in the future. That's one thing that I think naturally kind of goes forward, rather than there being a huge electric car infrastructure. I don't see the electric car infrastructure in the future.
You have to produce that energy anyway.
Yeah, exactly. You still have to produce it, but there's other ways, such as we talked about natural gas. That's one way to get very cheap production.
Very interesting insight. Geoffrey Puzzi, energy consultant, sir. Thank you very much. Very interesting conversation, and that was it for tonight's Poland Daily Business.